Okay, so now we're going to get into the slightly more complex examples, but again, hopefully you should be somewhat familiar and comfortable with this from the market structure modules because it's exactly the same, but we're now just overlaying supply and demand into it, okay? So with this specific example, just think about one time frame, okay? Just think about the 4-hour chart, it kind of helps you visualize it, but we're going to look at the 3 different types of structure, and if we got an example like this, sort of how we can trade it using the frameworks and the rules that we use, right? So let's start from the start and take it nice and slow. This is our swing structure, big swing move to the upside, we pull back, and then we break swing structure to the upside, right? So when we get that break of structure, what can we do? We can look back and look for where did the demand step in that led to the break of structure, okay? And you're gonna get that pivot created demand at the extreme of the move, right? That led to the move. Now, in other examples, there might be, you might have this one, obviously at the extreme, but then there also may have been a bit of a pullback here and led to a movement like that, right? So then you would have another zone. So you'd have that zone and then you would have the extreme as well, okay? So that's what you can do. Once you get that break of structure here, you can look back for where was the demand, if you can spot any demand zones that led to that move. Okay, cool. Once we have that break of structure, what do we now expect? We expect a swing pullback on that time frame. From a market structure perspective, what signals can we look for to help us or to help signal that that swing pullback may be starting? We can look for a chock, right? Or we can look for an IBOS, okay? Now, obviously, when we get a chock at that moment, that only gives us true confirmation that it's an internal pullback because it could pull back into this internal low and continue higher. But it's the first early signal. It's that first little bearish structure shift. If we had price action like this, where we had that internal pullback and then we get the bearish IBOS, that's really good structural confirmation, right? That we're now, in the swing pullback phase, okay? So again, hopefully you should be familiar with that from the market structure module. Now we're overlaying, right, supply onto this. What could, again, give us an early signal of potentially when that swing pullback may start. Hopefully you've guessed it. Yes, we can look left at old price action, like we just talked about in the previous example, and look for where are there unmitigated, ideally unmitigated, completely fresh zones. It doesn't have to be completely fresh zones. Sometimes old zones that have been tapped into will play out, but ideally the ones that are completely unmitigated are the ones I'm going to be concentrating on. And I'll draw that zone across here. So now as price comes up into here, at this exact moment I'm circling, you could look to get short, okay? So whether you enter, directly, this could be your entry time frame. Maybe you take an entry like that and you're targeting down, or perhaps you'll jump into a lower time frame once price reaches there and you'll look for your entry model. Again, we'll talk about this in future lessons. But the point is at this moment, you could try and anticipate that this is where the swing pullback is going to kick in, right? Hopefully you can guess why that's quite risky. And it's risky in terms of the amount of confidence you have. Because at this moment where my mouse is, if you're trying to short, the fractal structure is bullish, the internal structure is bullish, and the swing structure is bullish. So you have to be super confident in this zone that you're trading from, right? And again, you could have the best zone in the world with all the confidence, but sometimes the trend will be strong and price will just push straight up through that supply, okay? So that would be kind of your riskiest entry if you wanted to short and play the swing pullback, is getting in as soon as price reaches that zone. If you want a little bit more confirmation, what's the first thing you can wait for is you can wait for a fractal structure shift, which is that's a change of character, right? So when you get that change of character, that little demand zone, that fractal demand is going to fail. So you kind of have that little demand fail and you have the fractal structure shifting. And what is going to cause that chock? There's going to be some supply that causes that chock. I don't know if you can see it, but there's a supply zone there. That's going to be your first sort of extra confirmation to now look to short, right? So point number 4 is you could short the supply that caused the chock. But be mindful that at that moment, that might only just be for an internal pullback, for price to pull back down into this strong low. Because remember, at this moment, if I get the highlighter tool, the internal structure is still bullish, okay? So we can look to get short. We get a bearish chock from this big level of supply. Very, very good early signal that this move may be about to occur. But if we only have a chock and the internal structure is still bullish, then when we get short from the supply, right, you can target down here, but you have to manage your expectations that it might only be an internal pullback into this strong internal low where there's internal demand, right? There's demand that led to the break of structure that then may continue higher, okay? So you just have to bear that in mind, okay? Now, as we see in this example, price reacts from demand, but it ends up failing, okay? So now we've got that bearish IBOS, which is a much stronger structure shift. The internal structure is now bearish, right, between this internal high and this internal low, and now we've got a lot more confirmation to play that pullback, okay? So that would be when you got even more confirmation, and again, you can look for where did the supply come in to cause that bearish IBOS. And you may have multiple, right? This is when trading's tricky. We don't always know. There could be multiple zones. So in this instance, it reacts from here. We could have a zone up here as well. So we can use things like premium and discount, right? That's what this is, the premium discount from the high down to the low, okay? And it's roughly around the EQ. So, it's a reasonably well-priced zone, and that's where price pulls back up to. And again, this is where we can look to short from, whether it's on this time frame or a time frame below, right? But hopefully you can start to see now how we're picturing, like, market structure gives you your framework, it gives you your expectations, it kind of tells you how much confidence you have to now expect if price is going to keep pulling back or if it's going to keep going in the pro trend direction. Then the tricky part becomes, okay, let's look for, if we're at this section in price action here when price is pulling back, and we know we want to try and capture that internal lower high to play the swing pullback, we have to try and guess where are we going to turn around. And this is where we can look for the supply zones in the previous leg, right? That's what we're looking for, the strong ones that led to that break of structure. Ideally they're in the premium as well. Again, you could enter directly on here, or what you could do is wait for structure to shift, right? You can look for a bearish change of character from here, whether it's on this time frame or a time frame below. Okay, you can see how there's so many different ways you can do things, and it will depend on each scenario, what's in your plan, blah, 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 blah. Try not to get too overwhelmed with that just now, but just make sure you understand kind of the rules and the frameworks in each scenario. Because if you kind of got those rules from day one and you understand what each piece of structure means, then hopefully when you overlay supply and demand on top of it, it's not too much more confusing, right? If that makes sense. So let's now say we've now got short from the supply zone, which is against the swing trend, right? Because we know we're just playing the swing pullback. So at any moment that swing high low could form, but it's pro the internal trend because this is the internal high. That's the strong internal high. This is the weak internal low. We've pulled back up to premium internal supply and we've got short. Now, where are we going to target? Again, we'll talk about management a lot more in depth, but just kind of think about the framework is, yes, we're pro internal trend and we can target the weak low, the internal low, but you have to remember we are bullish on the swing trend. So at any moment that swing high low could form. So when we're trading pro internal trend, but against the swing trend, we don't want to be pushing price too far, okay? So this is where you can either, like I said here, target the weak internal low, right? So take your profits here, or you could target all the way down until when we reach discount demand, or maybe you just want to use a quick fixed R target and you always take 5R. The point I'm trying to make is you just need to be a bit more aggressive when you're trading against the swing trend, okay? Now, as we're coming down, we're getting near into the discount, right, of this swing leg. That's the EQ. So now we have to start thinking about any moment that swing high low could form. Okay, so when we come down here, bullish change of character, but we know a change of character only signals an internal pullback. That's the internal high, that's the internal low, and then we end up coming down. So that's why at this moment, right, when we get that bullish chock, this is where you go, okay, well, we have pulled down to the discount of the previous swing range. So the swing high low could be forming, right? We've had a bullish change of character. So there's a little bit of bullish structure shifting there. And we now do have demand that caused that bullish chock, okay? This is where a lot of people can get caught out, because when price then is pulling back here, if we try and get long, right, there's some logic behind that, okay, because the swing high low could be forming, we've had a bullish change of character, we now have demands that caused the chock, we could get long, but remember, change of character only signals what? It only signals an internal pullback, and at that moment, the internal structure, is still bearish, right? So if price pulls back and now the pullback's complete and now we're trying to buy from down here, well, you're buying from a weak internal low because it never broke structure, never did its job, okay? So that's kind of two things that can help to potentially avoid taking a loss here, is that it only caused a chock, okay? So that's not really that significant. And this low here, it never mitigated any demand zone, okay? If price pulls back and it mitigates strong demand here, and then you get the chock, it's a much stronger confidence that potentially we're now ready to go because we've filled up a load of demand from over here, okay? So the difference between getting long here on a zone that only caused a chock and getting long here on a zone that only caused a chock, a big part of that is that we have now mitigated a zone, a swing zone that caused the boss, especially if it's the one in the extreme, okay? Because when we pull back to that extreme demand, really this is the last line in the sand. This is the last level that has to hold. This demand zone has to hold if the swing trend is going to stay bullish. So this is a pretty good place to get long, right? We may as well risk our money here because this should be high probability. So now when price comes down, we mitigate the extreme demand here, strong level of demand, and then we get a bullish chock. Yes, we can get long now on the demand that caused that shock. And yes, it may only be an internal pullback up to supply and then it could continue down. We know that. But you see now how like this is a lot higher probability than this one here. Hopefully that's kind of clear. So let's say we get long and then we're targeting up here. As we come into this supply zone, right? So this supply here, that caused the boss, because remember, this is the internal trend, up, down. So now we've got long on the change of character and we're playing that internal pullback. We have to be aware that as we come into that supply that caused the break of that low, this is a strong internal high. Price could continue to the downside here. We do have to be aware of that. But hopefully, because we've now come into the strong extreme demand, it's much more likely that the internal structure is now ready to shift bullish because the swing pullback is over and we're now ready to target the weak internal high. Okay. Again, I know this is a lot to take in. I really do appreciate that. But this is why hopefully you should be very familiar with this framework from the market structure module, okay? All we're now doing is just overlaying these boxes just to show where you can enter. That's it, okay? So that's your kind of, well, the earliest way you could have gotten long is you could have gotten long as soon as we came into here, right? You could have entered on this time frame or a lower time frame. Bit more confirmation is you wait for this time frame to have a bullish chock to confirm this level's holding. Okay, boom. Now we can get in on this demand zone that caused the chock. More confirmation would be to wait for price to break this high, right? So now the internal structure is bullish. That signals the swing pullback is now over. And now we can look to buy from that strong demand that caused the bullish IBOS, right? And price comes in. Again, you could get long straight away, or you could wait for a chock and get in on the demand that caused the chock, etc., etc. And we target all the way up. And this is where, as soon as that bullish IBOS occurs and the internal structure is bullish, remember, we look left, any supply zones or mitigated supply zones that might be here, we can short from them, but we know we're just playing a quick pullback play. Again, we come up here, we mitigate supply level that's unmitigated. Again, quick pullback play because we're coming into strong demand to then play that move to the upside. Okay, so it all starts with structure. That manages your expectations, and we're simply just overlaying our supply and demand to help us anticipate where these structure shifts are going to happen. And when the structure shift does happen, if it happens after mitigating our supply or demand zone, do you see how that gives it more confidence? Like here, we had a structure shift, but we hadn't mitigated any obvious demand zone here. So this is I'm a lot more skeptical trying to buy here. Whereas when we come down here, I know we've filled up a load of orders now because there was demand here, there was demand zone. So now when I get that aggressive chock, I have a lot more confidence taking this trade. Okay, and that's the key thing. So let's just take a look at one last example before we hop on the charts. So this example is based on multi-time frame market structure. So in the previous example we just looked at, that was one time frame, but we looked at the 3 types of structure. This is 3 different time frames, but it's probably easiest, so you don't confuse yourself, if you think of all of it as swing structure. Okay, that's going to be probably the easiest way to wrap your mind around this, okay? Now what you'll probably also notice is it's literally drawn the exact same way as the previous example we just went through. Okay, and that's where some of your minds might just be really struggling to wrap your head around this. And as you get more familiar with it, some of you, like the penny might start to be dropping about it. It's all just a fractal nature of the market, and it's all just the same framework and the same rules. But I totally appreciate if you're kind of going through this for the first time. This can be a lot to take in, okay? But essentially, as you see, we'll go through this. It's literally just the same example. But think about 3 different time frames. So the daily, the 4 hour, and the M15, but it can be any high time frame, medium time frame, or low time frame you want. And just think about swing structure, just because it's going to be a little bit easier to wrap your head around. But in the real market, it could be, we could be talking about internal structure, we could be talking about fractal. It gets all a bit mashed together, but you will gain experience with that as we go through things, okay? Right, sweet. So big thick black line, it's our hard time frame, but let's just call it the daily because it's probably easier to think about when you know what specific time frame it is, okay? So bullish daily structure, we pull back, we break to the upside, and we form a daily high. We can now look back and go, where was the demand that stepped in to cause that swing break of structure? And now we have drawn on our daily extreme demand zone, okay? So that's our daily zone. Cool. So we'll leave that there for later. As price is impulsing up, from a market structure standpoint, we know that we can look for structure to shift, but what can we also look for? We can look left and go, are there any old zones? Okay, here's a big daily zone that we found from old structure that's unmitigated. So we know there's a decent probability that if we're looking for a daily pullback, it's more likely to occur once it hits daily supply, right? Because it needs a daily amount of supply to cause a daily move more often than not, right? Because you might look left over here and you might find some old 4 hour zones or some old M15 zones, but they're unlikely, not always, but they're unlikely to be the zone that causes that pullback. It's usually once it reaches the same zone on the same time frame that then you get that pullback, okay? So we come into a daily zone, we then shift structure to the downside. Now this could be a daily IBOS, it could just be a daily chalk, right? Sometimes there isn't even one, but let's just imagine it's a daily chalk. If we drop down to the 4-hour chart, which is this slightly thinner line, now we can see that the 4-hour chart is now bearish, okay? So we've had a mitigation of daily supply. We've had probably, let's just call it a daily chalk, right? It could be daily IBOS, whatever. Just some structure on a daily chart shifted bearish, but this is the daily swing high, this is the daily swing low. Had a daily bearish change of character. Drop down to the 4-hour chart and we can see that the 4-hour swing trend is now bearish, okay? Now we have that 4-hour supply that caused that 4-hour boss and we can look to get short. And again, we can look to follow this 4-hour swing trend, but we know that this 4-hour bearish swing trend isn't likely to last very, very long. Why isn't this 4-hour bearish swing trend likely to last very long? Well, we know we're just in the daily pullback phase. So we know as we get into below the daily EQ, into the daily discount, and as we approach daily demand, okay, we know there's an increased probability that that daily swing high low could form and the 4-hour chart could switch bullish, okay? So when we're trading counter daily trends, it's higher probability at the start of the move, right? Hopefully you guys should be familiar with that. Now, as we get nearer and nearer down into here, again, like I just said before, you could have a 4-hour bullish IBOS or a 4-hour chalk, and potentially you could look to long from this demand, but we have to understand, well, we haven't mitigated any daily demand just yet. It's a lot lower probability. But once we actually see that demand mitigated, we now know high probable that that swing high low could be forming. And then if you wait for even more confirmation and you wait for the 4-hour to shift bullish, all right, now you're trading in line with the daily and the 4-hour trend. And now you have a 4-hour zone. So you could look to get long here straight away. Or what else could you do? You could drop down to the M15 and you could wait for price to mitigate that 4-hour zone. Drop down to the M15 because you want a little bit more confirmation that this 4-hour zone is going to hold. Wait for the M15 to structures to shift bullish. Okay, now you've got confirmation the 4-hour zone's holding, right? And now we can get long from the M15 zone. Okay, so on one time frame, right, you have the daily swing higher high, swing higher low, swing higher high, pulls back to forms swing high low, and it continues. Nice and simple. But within that, what do we have? We have the 4-hour trend, right? So this is where we can trade that bearish 4-hour trend, but it's within the daily pullback phase, okay? We can look to get long from within here, right? But at this moment, we're against the 4-hour chart. Once that 4-hour chart then shifts bullish, okay, cool. Now we're trading longs of pro 4-hour and pro daily, right? But for the 4-hour chart to pull back, what is likely going to happen? It's likely, not always, but it's likely the M15 is going to shift bearish, or at least the M15 internal structure. You'll see some sort of structure shift on the M15, right, to facilitate that 4-hour pullback. And you can look to get long in here straight away, right? You can do that. Or if you want to again wait for a bit more confirmation, wait for that bullish M15 structure shift, okay? Then look for price to pull back into the M15 zone. Maybe then you want to jump down to the M1 time frame, and what do you want to do on the M1? You want to look for the M1 to shift bullish, right? Then you've got M1 confirmation of the M15 zone, confirming the 4-hour zone, confirming the daily zone, right? You see how it's just fractal. It all turns on the lower time frame first to confirm the higher time frame, to confirm the higher time frame. But we don't start on the lower time frame. We always start on the higher time frame and then we work our way down, okay? It all comes from the higher time frame. So again, for some of you, you've probably got this, happy days. For some of you, this literally, I might be talking gobbledygook to you. It might be a completely foreign language, and I totally get it. I don't want to say complex. I don't want to put limiting beliefs on you, but this can be quite a lot to take in, especially if English isn't your first language, or you're new to trading or new to the style. Don't worry, right? It's not supposed to be super easy, but I promise it will become easy as long as you're consistent with learning this and sticking to it and really trying to wrap your head around it. But it all stems from having a solid understanding of market structure, okay? Because if you just jump into the market and you just start looking for supply and demand zones that have broken, a high or a low, it's broken some structure, and you try and trade from it, but you haven't done the work to really, really understand the overall multi-time frame narrative, the story behind price action, really manage your expectations of how far price is likely to go. Simple things like the market's not as simple as nice pullbacks and everything just goes. Like sometimes you'll go, okay, we've mitigated daily extreme. The 4-hour chart's now shifted bullish. So the 4-hour and the daily are both aligned, right? M15's pulling back. And you might go, okay, once that M15 shifts bullish, right, this should now be in theory, this zone I'm drawing is an M15. This should now in theory be a strong M15 zone. Why? Well, the M15 is bullish, the 4-hour is bullish, the daily is bullish. it's very likely we've had the daily pullback. So now as price is coming into this M15 zone, right, I'm thinking, and I would do, this is super high probability to get long, right? But it could fail. It could easily fail because price might want to come back down again and it might want to mitigate this extreme zone, right? We never know with 100% certainty. Sometimes it will react from here and go, and there might be a demand zone in the previous leg. Sometimes that will fail and will come down lower, right? The market's not always as easy as I'd love it to be, right? But what it comes back to is if you understand the frameworks and you understand those rules, then in every single different individual price action scenario, you will understand how to manage your expectations when you understand the core frameworks, because you always apply it. Okay, so watch this again and again and again, and then we'll go through some examples on the charts, and hopefully it will start to become a little bit more real. But this is just something that you every day turn up, every week review the charts, and you will see week by week by week slowly how price action plays out in a live market. As you map on your swing highs and lows, you map on your structure, you draw on your zones. It takes time, but you will get a feel for how the market moves, why things are respected, why they're not, how to manage your expectations. You're not just going to get it from watching this and going, yep, and then I'll show you some examples and go, yep. Like in a live market, it's tricky, okay? But it will come with time, and I promise you will get it. You just need to stick with it. But when you get this, it's like having X-ray vision of the market, and it all just becomes sort of one beautiful symphony, as someone described it, of where everything sort of comes together. And you don't need to kind of, because right now, it's when you're learning a new thing, it's like when you first drive a car, right? We talked about this at the start of the technical analysis module. You've got to think about everything. You've got to think where you're putting your foot down and put it in the right gear, and you're checking on the mirrors, and like you're constantly thinking everything that you need to do. Whereas when you're used to driving, you just drive. Like you're thinking about completely other things. You're not even thinking about driving, you just do it subconsciously. That is what eventually will happen when you come to charts. You literally just look at a chart, you mark a few things, and you almost already know everything that's going on and what you're expecting, and you will get there. Cool. Hope we took some value from that, and we'll hop on the charts the next one. Alrighty, so now we're going to look at a multi-time frame market structure example overlaid with supply and demand, of course. Now we're going to look at what is quite an old price action example, but it's the same one that we went through in the multi-time frame market structure lesson in the market structure module, of course. So I just thought it kind of makes sense to reuse that, because then you guys can see how we now use that same process, that same framework, but we're overlaying supply and demand onto that to help us with our trading, right? So what we're going to do is we're going to use 3 time frames: a daily chart, 4-hour chart, and M15, and that's going to be sort of the common theme, right? So obviously we're going to get into the actual trade plan and entries in sort of more detail as we go on throughout the course, but I think it's probably quite useful for you guys to, I guess, understand what it is we're really trying to do here. And it's pretty much, you have your main time frame, or your higher time frame, let's say the daily chart, and you just want to know, like, are we in the impulsive pro trend phase, or are we in the pullback phase, the counter trend pullback phase? Once you know that, you then go down to your medium time frame, let's say the 4-hour chart, and that's kind of the main time frame in which you're forming your bias for. Like, that's the direction in which that's the main bias. That's the main sort of idea you're trying to trade. And then you have a lower time frame execution. So for instance, the M15, and you use that to kind of help time what you're trying to do on the 4-hour chart, but that will become clearer as we go on. So I guess what I'm trying to say here is start to think through the lens of, like, if we were going to enter on the M15, right? So when risk reward is in our favor to use M15. So daily chart, we are bearish, right? We can see big push to the downside. Let me make this thicker. Let's make it black. Cool. So strong trend to the downside, okay. Swing pullback, swing lower low, swing higher high. Sorry, swing lower high, swing lower low, swing lower high, swing lower low, right? Last break of structure was over here. We had that bearish swing break of structure. And now what we can do is zoom in, because we know the current range we are within. Okay, mark on your current strong swing high, so you always know what range you are mapped in. I won't bother marking on the swing low until we have what we deem to be significant enough of a swing pullback. So we know where the actual swing low is. I don't know why that's gone orange. Show me that a bit more. Okay, cool, whatever. Right, so after swing break of structure, what do you expect? To expect a swing pullback on that time frame. We can look left. Is there any levels of demand? Not really, not until around about down here. It's probably a level I would draw on. Let's do it. But yeah, other than that, there's not really anything too significant. There are, of course, sell to buy wick zones here that we're currently within. So we may see some pressure from here, but it's not really that significant on this time frame. So personally, I don't really bother paying too much attention to those. So yeah, we're expecting a swing pullback. We're starting to fall a little bit more correctively. You can see where we had that fractal break of structure and we mitigated this level of daily supply, right? And we continue down. In terms of drawing that supply, this is kind of another one of those tricky examples where you have the bullish candle, right? So ideally we want to be drawing it on that, but the next candle fails to close below it. So that's where I personally like to, evolve it to the next candle, where then you do get the thrust candle that does actually close below the wick, right? In this instance though, like if I was drawing that and price was coming back in and I was looking for shorts, typically when I do that, I would cover the high. Like I'd want to have that high covered, and that's pretty much kind of how I would draw that zone for the most part. So we had a bit of pullback into that supply, and then we've had another fractal break of that low, which technically now does give us another daily supply zone here, okay? So this is where, you can continue to keep following that bearish order flow, right? We could potentially get another mitigation and fall to the downside, and that's fine. I would be doing that live market. I would continue to be looking for shorts, but I'm very, very wary of the fact, where are we in structure? We've had that daily bust. We're expecting a deeper swing pullback. We're starting to fall a little bit more correctively. So at any moment, we could see that supply fail and we could see that shift in structure. But until that happens, we can cautiously follow those shorts and just be quick with our targets, okay? So let's play this forward a little bit if it will let me. There we go. Okay, so big, strong bullish move to the upside. We can clearly see now that this daily supply zone has failed. Okay, so we have a bullish structure shift, okay, and a supply fail. So that's a good signal that potentially, we're going to get that deeper swing pullback. So we've got a bullish daily change of character. So let me just make that dashed line, right? And I'll move to upside. Now, yes, there is potentially some orders left from within here. And yes, price could tap into here because it's just a chalk, right? It could fill up more orders and it could keep going. There is that possibility. But the fact that, we had that mitigation, it filled up the orders, we came down lower, we then had fresh supply, but then price traded up through that. It caused that most recent unmitigated level of supply to fail, and we got the bullish chalk. Excuse me, that's a pretty good signal that we potentially could now be having that deeper pullback. What also do we have? We now have daily demand that caused that change of character, okay? So we can draw it to the refined pivot candle like that, or of course you could draw it from both, right? Because the candle then engulfs both of them if you want a bit more of that. Some people call that a pivot, other people call that a demand range, right? Doesn't really matter, but you guys can see what I'm getting there, okay? But I'm just gonna refine it to the candle just to be a little bit more refined, okay? So now what we're expecting is potentially, if this demand level can hold, or we start to see price pulling back up towards the premium, right? So we can get on our premium discount tool, right? Whether you want to draw it over here just to keep your charts a little bit more clean, or you can, move it across and you can see roughly the EQ or the premium levels are around there. So in terms of, let's keep this out of the way, just keep it kind of clean. In terms of levels of supply, price could come back up to, right? Let's start with the extreme. It's generally going to be the highest probability. You've got this nice zone up there. Now, yes, again, see, technically price did not close below the low, right? So technically it's not demand if you want to be mechanical. So you should evolve it to the next candle because this candle does close below the low, right? So you could draw it like that. But you see when you've got like a big wick behind it, I personally just prefer to kind of cover it. So that would be the level of extreme supply I'd be looking at. Next level you've got here, right? You've got this pivot, see how it's like the buy to sell. Okay, so that's your next supply range. You got that level there, quite big. So we could refine it to that pivot there. But again, you see how it's got the wick behind it? That's where, to me, I just prefer to cover that as well. So you've got both candles there. That would be your next supply zone. And then you've got this buy to sell range here as well, okay? And again, if you want to, you could refine that to the inside bar, but I would just be wary of the range there as well, okay? So they're kind of your three levels, roughly, in the EQ. And then there we go. Yes, there could be orders from within here, so I would be wary of that. But the fact that we already had a mitigation of that level, it did its job, right? It made a lower low, and now we've seen that shift. So we've seen that disruption to the bearish order flow there. This is a pretty good signal that potentially could be getting that pullback now, okay? So bullish daily change of character. Now let's see if we can potentially get order flow to look to trade up to here and then see if we can catch that swing daily lower high. So dropping down to the 4-hour chart, let me just quickly rein these in a little bit for my chart OCD. What do we have on the 4-hour time frame? So nice clear swing structure here, right? Swing lower low, swing lower high, swing lower low, swing lower high, right? And then we just about get, I believe, a break and close below that low. Yes, we do. So let's take our time and draw on our swing structure, right? There's our swing breaker structure. Now you see that daily change of character. I'm just going to hide it from these time frames, but it just so happens that that is where the bullish 4-hour swing boss is as well. Okay, so we are now currently bullish. This 4-hour low becomes our strong 4-hour swing low, right? It's strong. Why? Because it's done its job. This big box here is that daily zone, right? So that's the daily demand zone that led to the daily chop. Okay, that's why it's a daily zone. Remember, quick recap, we are only really trying to be interested in what we call institutional zones, right? So it needs to be a zone that has achieved something, right? In this case, we want to see that it's broken structure. For a daily zone to be valid, right? For it to be a valid institutional zone, it needs to break daily structure. Okay, so if you just had a daily, candle, bearish candle that then the next candle closes above it, but it doesn't break any daily structure, it might break 4-hour structure when you go and look down on the 4-hour time frame. But if this high here hadn't broken the daily structure, then it wouldn't be a valid daily institutional zone. Okay, so for a supply demand zone to be what we call an institutional zone or a strong zone, whatever name you want to give it, it needs to break structure on the same time frame. Okay, hopefully that makes sense. So we have a valid strong daily zone. Okay, 4-hour chart, swing trend is now bullish. So what do we expect after a break of structure on the 4-hour time frame? We expect a 4-hour swing pullback. What are the two things we can look for to help us anticipate when that swing pullback is going to start? The first thing we look for is a shift in structure, right? So we can look for at least, or the first signal we're going to see is a 4-hour bearish change of character. What's now the other thing we can use? We can look for supply and demand. So in this case, we want to look for old supply zones. So if we look left, where are we? We've got this zone here, right? That inside bar, basically within the this 4-hour range, right? So we have this larger sort of, big, it's a bit messy, right? Big candle and a few candles within it. We've already had a mitigation of that range there, but we can refine it to that inside bar. Now, again, you may want to just be nice and refined to the single candle or include the wick. It's kind of up to you, but we can see price is in there. So we may pull back from here, we may not. Next sort of key level is we have this inside bar here again. And this is another one where you may just want to kind of clean it up a little bit, read between the lines, right? And take kind of to include that wick. So you've got a slightly larger zone. So they're sorts of the two nearest levels in which I'd be looking for potentially price could pull back from. In terms of then where we can look to potentially capture the longs, right? Because remember, the key tip with drawing your supply and demand zones is just kind of concentrate on the current swing range we're within, okay? So we know this is our swing low. Obviously, this is where the high is at the moment. Just look at demand within this leg, right? Don't be kind of spending time looking left and trying to find zones outside of the range down here. Like if there was price action here, there's no point, right? Because we're not trading there yet. Concentrate on this range and then maybe look at one or two of the nearest supply zones to the left of potentially where price could pull back from. And that's it. Don't spend ages drawing on like all of the 4-hour zones up here, right? It's just pointless in my opinion. It just makes your charts a bit messy. Cool. So we start to come into this level. Let's see if the supply zone can hold. But what I'm looking for in this instance is I'm just going to wait to see if we can get a 4-hour bearish shift in structure. So we start to see, a bit of a pullback. Now, if you're trading on the lower time frames, you could start to look for a quick move from within here. But again, remember, just be wary that when you first initially get that swing trend change, more often than not, but not always, but more often than not, price can be quite impulsive and it can move for quite some time before you get that sustained pullback. Or when you do get a bit of a pullback, it can be just a quick one before we go higher. So if you are looking for shorts, let's say on the lower time frame, maybe you've jumped down to the M15 or the M5 or whatever, just be wary that it may be a bit of a reaction before we push up higher, and you're not getting in short in a nice trade and then holding on and trying to push for there, okay? Because then you take a break even or a loss unnecessarily. But anyway, here's the extreme demand level, and then the only other demand level we've got, of course, is this candle here as well, right? The sell candle before the buy, next candle closes above it, and it leads to a break of structure, right? Both of these zones are valid strong zones or valid institutional zones, right? Because they achieved something, they broke structure. Cool. And what's nice about them, even though we haven't started to have the pullback already, they're both pretty much in the discount of that leg, right? So let's play this forward and see what happens. So we've got a bit of an intraday reaction, but it wasn't enough to hold price, and we've pushed up a bit higher. So I'm just going to delete that for the minute, and then that will become our 4-hour, fractal low, okay? Now again, price comes into this 4-hour zone, so if you're trading on the M15 or whatever, you may want to start to look for shorts already, but just it's a bit risky, right? So we can wait for a bit more confirmation. Nice big reaction. Okay, and let's see, now we get the 4-hour bearish change of character. So that's a very good sign that structure's shifting, the supply level is holding, and potentially now we're going to get that deeper pullback, right? So that's it's a decent pullback relative to recent price action. So now I'm going to mark this on as my 4-hour week swing high, okay? We've had a 4-hour bearish chock, and now we have a 4-hour supply zone, right, that caused that bearish 4-hour change of character, okay? So very simple forecast, what could we expect? Prices had a bearish chock, potentially it will pull back up into the supply that caused the chock, and then we can look for that bearish order flow to come back down into that daily demand that had caused the daily bullish chock and had caused, the 4-hour demands that caused the 4-hour swing boss. Essentially, we're looking for, this is the demand, right, that stepped into the market to cause structure to shift. That's as simple as it is, right? We've come into an old level of supply. We've mitigated that. Strong reaction from it. We're seeing structure start to shift. The fractal structure starts to shift. So now we can trade that pullback, right? Potentially down into this level and then try and capture that high low to target the week high. Okay, should all be very familiar with that from the market structure perspective. Now we're just overlaying our boxes, right, to help us time where those potential entries could be. Now what I'm going to do, just kind of hold all of that in your mind of what I just said on the 4-hour chart, and now we're going to jump down to the M15 to give us a little bit more refinement and timing to see if we can, look for trades. Because if you wanted to, you could enter on the 4-hour chart, right? You don't have to go any lower. Like if you want to enter on the 4-hour chart, you can. Not the problem, but the thing you have to deal with compared to going lower is then, again, you can enter within the zones, we can get tricky with our entries, but just for the sake of keeping things simple, with supply and demand for now, we're just going to assume that we always enter on the edge of the zone, okay? So if we did that, risk to reward is not as great, right? So we'll target that week high. We've only got a 1.8R. Maybe you can target a bit further because this big box is daily supply, remember? Maybe you want to target up here. Okay, you got 3R. But if we can go on the M15, right, we might be able to get something like this. We might be able to find more opportunity to short from within here because, again, you could want to short this on the 4-hour chart, but you are taking a counter trend trade. Maybe, you're barely getting one-to-one risk reward to demand. For me, that wouldn't be high enough risk reward to take a counter trend trade. It just wouldn't. So that's why we jump down to the lower timeframes, okay? Now, if you are someone who wants to enter on the 4-hour chart, again, I don't want to put you off it. It's just you want to do it at the start of these trends, right? So this would be pro 4-hour trend. You want to be getting in here, and you don't just really want to be targeting that high for 1.8. You want to be looking for kind of those bigger daily moves. That's what you want to be looking at. You want to be, if you're entering on the 4-hour chart, you want to be using that to time daily moves. If you're entering on the M15, you want to use that to capture the 4-hour move, if that makes sense, right? Okay, cool. So bearish 4-hour chock. Let's look to see if we can play pullback into demand, and then let's to see if then we can capture the pro 4-hour move to target the week 4-hour high, right? So jump down to the M15 and let's see what we can see. So I'm going to just rein in, spend a little bit of time just doing some chart hygiene because I think it can really help so you don't get lost and you don't just have boxes everywhere. It's good to try and keep your mind fresh of what's going on, okay? So this is our 4-hour swing low, okay? This is the range we're playing within. This is our 4-hour swing high. That was our 4-hour bearish change of character. That was the 4-hour supply that caused the bearish chock, okay? And we're looking to see if potentially we can get moves into 4-hour demand to then try and capture that 4-hour high or low to then target that 4-hour week high, swing high, and beyond, potentially up to daily supply, okay? And we've got a couple of levels in which that could potentially happen. So that 4-hour bearish change of character, which is this level here, what is that on the M15 in this instance, right? You can see nice big swing pullback on the M15, swing higher high, and then we have shifted bearish. I'm just going to bring it back just a few candles to where the boss occurred. Okay, let's draw on that swing low. All right, and this was our swing high here. Okay, so M15 has switched bearish. Let's zoom in. So let's think about how we can trade with the M15 to capitalize on the 4-hour swing pullback. So this becomes our strong M15 high. Okay, I know it can seem really over the top to do all of this, but when you're in the live market, constantly having your templates all drawn out, knowing where your strong ranges are, knowing where your current strong and weak structure is, it really helps you to not get lost in the source. Because it can be very, very easy to do so, especially when you get more complex and sort of range-bound price action. It's really good to always, have your compass, have your lighthouse telling you, which way you need to be going. Anyway, that was a poor analogy, so let's just crack on with things. So we've had a M15 bearish boss. We're looking to pay the 4-hour pullback. What do we expect though after an M15 bearish boss? We expect an M15 swing pullback, okay? So what can tell us where that swing pullback may start? Well, we can wait for at least a bullish M15 change of character. We know that, but now what can we bring in? We can bring in supply and demand. So if we look left, are there any nearby unmitigated demand levels? Yes, look at this. We have this pivot here, right? So you can clearly see that this level, right, that pivot in price did what? It led to that break of structure, right? That's where the demand stepped in to break that high. Nice bearish candle that before the bullish candle. Again, if you want to be super mechanical, evolve it to the one where the next candle closes above its high. And again, hopefully you've seen me say a few times, when you have kind of a wick like that, I prefer to just include it, okay? So you've got that, it doesn't add too much to it, and that would be a level I would look at. Now, like I said at the start, we're gonna look at this through the lens of entering on the M15. So would this be a type of M15 entry I would personally take? For me, not really, because it's just an M15 zone. It's kind of a little bit random. Like it's kind of just in this leg, it's, yes, it did break this high, but it's kind of in no man's land. We've only just switched bearish, right? Price could easily smash through this. Like it's not, nested within a 4-hour zone. It doesn't have a ton of confidence. So personally, I would want to see if it's going to hold. And what you can look for is are we going to get a structure shift? And then you could look for, okay, now I actually have a bit more confidence, right? To then play that pullback. Okay, that's the type of thing in which you can do. You don't have to do that. You can jump in straight away. You can look on the M1. But for now, just let's think about it through the lens of, does it make sense to enter on the M15, okay? So we're coming down, we now tap into the zone, and let's say you want to trade this pullback, but you want to wait for that M15 bullish change of character, right? So that would be your high there. Okay, so we push deeper into the zone, nice strong reaction, and we get our bullish shock. Now technically you have your M15 demand level that led to that bullish change of character, right? And that could now be a potential level you could look to trade from, okay? Now, again, there's ways you can refine your entries. You can enter within the zone to increase your risk reward, but like I keep saying, we're just going to keep things simple and always enter on the edge of the zone. In terms of targets, again, I'm not going to talk about that too much for now, but let's just keep things simple. And let's say we have a really simple management strategy and we're just always going to target set and forget fixed 3R, okay? So what are we trying to do here? We have a break of structure. We've tapped into a demand level. We've had a bullish chock from that demand level. So now we're looking to play a swing pullback play up and towards the premium levels of supply. And there's a quick 3R, okay? What you can also do is draw on your levels of supply as well, where potentially price is going to come into. So nice, clean. Now this is like a picture perfect supply zone, right? Bullish candle, next bearish candle closes below it. It's at the extreme, nice strong movement, right? That's my favorite type, right? Just clearly supply steps into the market, that pivot in price, right at the strong swing high, beautiful, beautiful zone. And then we also have this pivot here, right? You've got this whole range. It's already had a mitigation of the range, right? But that's massive. I'm going to refine it to something like that, right? And I'll just include the high of the wick. And there you go. You can see that injection of supply into the market that eventually led to that swing boss there, okay? And then you've got this level here as well. So yeah, there's some potential levels in which it could happen. Of course, you can overlay some confluence. We've got premium and discount. So from the swing low to the swing high, and we know all of these are pretty much in the premium, okay? So I'm just going to delete that to try and keep the chart a little bit cleaner, right? So in terms of playing the swing pullback, that could be, a first potential level. Now, when we were just talking about it, set the order when price was like that, okay? Now, what you may want to do, and what I would probably advise, is at this point, yes, there's technically a bullish chock because all we need to see is a wick break, right, for fractal structure. But sometimes if you're not sure, just wait for a little bit more. Like look to see, does price really commit to itself and like close above? And that can help you avoid a lot of losses, because sometimes price will come into an old zone. It will just, a bit of a reaction. It might cause a little bit of a wick break, but has price really gone anywhere? Like has supply really failed? Have we really, really shifted? It's not really that obvious just yet, right? Because it could do that. You could get long and we could just dump. Whereas if you see a bit more of a commitment, then you can have a bit more confidence, right? So if you want to wait for a bit more, wait for a bit more, right? Some people may want to wait for a clear candle closure before setting an entry, okay? So now you'd be tagged into this trade. And then you can, again, look for a quick fixed R. And this is a good example of why we always protect our stop loss behind structure, behind the low, okay? Now, in terms of looking for shorts, because really shorts is going to be the most ideal, right? Because we're going to be trading pro M15 trend. There's a few ways you can do this. Something which, again, we'll talk about entries more in the future, but kind of, I don't want to overcomplicate it too much now. Something we call a risk entry is where you literally just set your order on what we call the POI, right? At the point of interest on the zone. And you would just think, right, okay, I'm happy to set an entry order here, or maybe on the extreme, right? And you don't wait for any confirmation. So that would be like, if we took a risk entry here, that would have just been just setting our order here, just looking for price to come into an old zone and just hoping that it's going to work. What we call a confirmation entry is, you guessed it, when we wait for a bit more confirmation and you get like a chock from a level you're interested in, right? That would be your confirmation entry. If you had it entered here, that's your risk entry. That's kind of what we call them, right? So if you're going to take risk entries, I wouldn't just set a sell limit on every single zone. I mean, you can do. I'm not here to tell you what you have to do or what you can't do. It's just you probably don't want to take 3 losses in a row in case we're wrong, okay? Because sometimes the M15 will switch bearish to have a bit of a pullback, but then the 4 hour is still bullish and we can end up going. It's not always going to be respected, right? So if you're going to do it, you kind of want to focus on the zones that have the most confluence, kind of the ones near the top, okay? So I wouldn't personally be looking to set a risk entry here. But for now, let's keep it simple and let's only look at confirmation entries, okay? So we're in this movement. We've now had a bit more of an internal structure shift, okay? A bit more of an IBOS so we can see, clearer sort of internal structure building. Let's give it that M15 IBOS, right? So again, I'm just gonna rein this in, hit that zone. And I appreciate charts can get very messy if you're not used to it as well, when you've kind of got multiple zones through multiple time frames and then you get risk to reward tools on. So try and do your best to kind of find colors and opacity that kind of just try to keep your charts as clean as possible, because otherwise it can get messy very, very quickly, right? But hopefully you can understand what we're doing. We're trying to play this M15 swing pullback up into 4 hour supply. Is this the highest probability trade in the world? I would argue not. It's counter trend. All we've really had is a chock and we're already trading into 4 hour supply, okay? So it's not the best in the world, but I'm just showing you, what's possible, right? What you could possibly do. So if you wanted to follow the strong internal structure, right? This is our strong M15 internal low. Okay, and then this would be our weak internal high. Now you can use dots and all that stuff and make it even clearer. For the interest of time, I'm gonna not draw on everything, but essentially if you wanted to follow the internal structure, what can we do? We can follow it like this up into the more premium levels. But obviously the best time to play the counter trend movement, you wanna kind of be getting in at the start of the move. Once we've already pulled back up towards the EQ and 4 hour supply, trading counter trend is getting, obviously, lower probability, right? But, you could potentially, let's just say for argument's sake, let's just do it. You could potentially trade here, right? Would I necessarily advise that against 4 hour supply? Probably not. Risk to reward's not great, but that could be somewhere you may want to look for an entry. Now, this is where, if you're someone who trades on the M1, maybe it makes a bit more sense for you, because then you could wait for a price to come in here. And if you get, the M1 chock and the entry model from within here, then you're going to get in with a much tighter stop loss, right? Because you don't have to put your stop all the way down here. And you could probably squeeze out 5R to like here. So then it can make a bit more sense being a bit more aggressive. So this is where, depending on what time frame you're entering on, although you're all reading the same thing and you all see this M15 POI, if you're an M15 trader, you might have to go, look, the risk to reward is not enough for me to want to target here. But if you're an M1 or M5 trader, then maybe it is, because you can get high risk to reward just trading that move, right? Because your stop loss is going to be smaller. Okay? So that was kind of a point I was trying to make. We're all going to look at the market the same way, but whether you trade that specific move will depend on your risk tolerance and what time frame you're entering on, right? To see if you can get the risk reward. So we take out the week high and now we're coming into this level. So I personally wouldn't set a risk entry on this short, but if we now came up here, right, and then we got that bearish change of character, giving us a fresh level of supply that caused a chock, okay, now I'll take the confirmation entry and I would get short here, because now I have confirmation and we can look for that move. Yes, if that happens, this is still a strong internal low and there's demand I have to trade through, okay? So it is risky, because you could come into here and then go higher, but because we've now pulled up into premium supply, it's pro M15 trend, right? Because the swing pullback could be over, then perhaps I'm a bit more willing to try and take that movement, okay? If that happens. So this is the thing, right? You're not always gonna have everything on your side. Sometimes you have to trade against the internal structure when you deem it to be appropriate enough and when you're happy to take that risk, right? And I'll show you as we go through this. So M15 IBOS, okay? There's all these levels of demand as well in the way, so you can take the single candle or you can take both of them. Candle closes above both. Nice strong pivot zone, so let's see what happens next. And then obviously you've got, I'll take my time and I'll draw this on, so I think it's worth doing so you guys can see, right? This is now the strong internal low. Okay, so this is how I'd be mapping it if it was live. Okay, so there's your 3R. If you took that counter trend trade, you'd be out of the trade now, right? So cool, happy days. So we're in the supply now. Let's see what happens next. Okay, we pushed through it. So that supply zone has failed. So the minute price trades through a zone, it's over. Capiche? There's no more orders left within it to contain price. So that zone is done. So I delete it from my charts. So now we're going, okay, let's see what happens as we come up to here. Let's see if we can get some nice structure shifting. Okay, a bit of a reaction. I'm not going to look to get involved yet. We don't have any bearish structure shift. Let's see. I'm not going to get in long from here either, because we're at a level in which I expect the swing pullback to potentially finish that swing lower high form. But let's see what happens. Okay, we push up higher. The zone hasn't completely failed yet, but let's see. Okay, so now we're coming into, again, another level of demand, right? Gone a little bit too quickly here. I didn't draw in all my structure, but you see how we've had another bullish IBOS. All right, so that bullish internal order flow is just continuing. And this is why it can save you from taking risk entries, right? If you just wait for the internal structure to shift in your favor first. Okay, so we're still within this 4-hour supply. This is kind of old demand now, right? Because we're currently now in this range. Okay, this is the internal range, right? So we kind of had, this is our structure. And I'm always trying to, for the most part, just keep my zones focused on the current range we're within. Okay, so potentially this could hold and we could come up higher. Or if we see that price break below this low, what do we then have? Then we would have a bearish IBOS. The internal structure would shift bearish. That would give us a very strong signal that the M15 swing pullback is finished. And then we could look to trade in line with demand, right? Because supply has failed, demand has regained control. This would become a strong internal high because it broke the strong internal low. So then we can look to short from strong supply, right? And then we can follow that bearish order flow, keep shorting these strong highs, right? And target these weak lows until we take out the overall weak swing low. Does that make sense? Hopefully it does, okay? So at this moment, again, you could have taken a risk entry on this, but we're waiting for more confirmation because this demand could easily hold and we could push up higher and we could come up to the extreme. So let's see what happens next. So demand's holding, bullish reaction, and there we go, right? So again, if you wait for more confirmation, you save yourself. So that supply zone is now done. So now we're coming up towards the extreme, okay? So you could look to set your entry here. So if you do like risk entries, this is gonna be the place to do it, right? Because this level has to hold if the M15 swing trend is going to stay bearish, okay? And then you could weigh up your risk to reward, okay? Over 5R to the swing low, for me, that would be good enough. I like, anything over 5R, I think is more than good enough. And then you would target the weak M15 swing low, right? If you wanted to take that trade. So what I'm going to do is let's leave that on there, but I'm just going to move it to the side, right? Just so we can focus on the price action. I just want to keep the charts somewhat clean as best I can, right? So at this moment, yeah, we have demand being respected there. And then we have this potential demand level here. Now, it's a bit debatable, okay, whether you call this pullback here an internal pullback. Like you could say that maybe we're still kind of within this range. Some of you might say we're within this range. So it's a little bit tricky, right? But what I want to see in that instance, if I'm not quite sure, is I just want to see like a clear shift. And I'll show you what I mean here. If we get it, right, so there, clear shift, right? Demand has now failed. We have a bearish chalk, right? We break and close below that low, and at least we spike to that low. So for me, that's pretty good confirmation, right? We come up in towards the extreme. Okay, we missed it by about a micro pip or so, which is unfortunate if you set your limit and didn't quite get tagged in. So yeah, a bit of a tricky one there. Probably depend on what broker you've got in spreads. But if you miss it, look, now you've got an opportunity with the confirmation entry because now we've got a strong shift in structure, and now we have supply that caused that move, okay? So there's a few ways you could draw your supply here. Some people always draw it on the bullish candle, right? And then we get the close below. Some of you may want to refine to the inside bar. But again, if you do that, I personally wouldn't refine it to the high. I would include the wick personally, okay? So now you've got your confirmation entry. Let's just, like I say, keep it simple. We're entering on the edge of the zone, stop behind the high, and then you can target this low here, okay? So it's not the most amazing risk to reward in the world, but for a pro M15 trend move, after mitigating the extreme with the confirmation entry within 4-hour supply, I think that's a pretty decent high probability trade. And also you may want to push it a bit further, right? You can target down to 4-hour demand if you want to, but let's just keep things simple, okay? Cool, so now let's see what happens. Again, wary previous levels of demand, right? I'm not too worried about them because now structure has shifted in my favor. So what will probably happen is price will come into these levels and we may see a bit of a reaction. Come into these levels, bit of a reaction back into supply, right? And we expect them to fail. Of course, price could come up here and push higher, but the expectation is that it won't happen. So we come into demand, right? We're not too surprised. It starts to react, but it's just a pullback. It doesn't do a lot, right? I'm not going to be looking to get long here. Why would I not to get long? Because I'm trading against everything at that moment, right? Everything is now bearish. The internal structure shifted bullish to do what? To facilitate the swing pullback to premium supply. Premium supply has now been mitigated. Demand is now failing. Supply is retaking control. The internal structure is now bearish. These are not where you want to be buying. And that's where so many traders go wrong. They now see these demand, they see momentum, and they think, oh, I want to buy here. That's not what you want to do, okay? You want to trade with as much confluence on your side as possible, okay? For the most part. So yes, if some of you may have now noticed, we have had a bullish chalk, okay? That is completely valid. Let's draw it on. And of course, now demand has held, and we do now have valid demand here that caused the chalk. But look, what matters more, fractal structure or swing and internal, right? Swing and internal, what matters? We've had the internal pullback. We've come up to extreme supply. We've shifted down to the downside, okay? So it's not surprising we've had a bullish chalk because price often has a change of character to do what? To facilitate the internal pullback into the strong internal high, and then we go. So we expect that to happen. So sometimes, yes, you are going to have to trade against fractal demand like that, okay? Because this is our strong internal high. Let's get it. All right, there we go. And then, is that going to grab for me? There's our weak low, okay? And that's the direction in which we want to be targeting. Remember, we're trading from strong structure into weak structure, okay? So there's your entry. Hopefully, guys, you can understand what we're doing, right? We're playing the end of the M15 swing pullback. We've got confirmation with internal structure on our side. We're entering on the supply that caused that move, and we're targeting the low, okay? Yes, there's demand in here, but like I'm not really bothered about it because I expect price to change the character for it to be able to pull back to tag me in, right? Price needs to fill up these orders. It doesn't need to, but that's most likely what it's trying to do, right? It's pulling back to get supply to then start that next move to the downside and target that low. Whereas other people see that shift to the upside and they buy here, but they're on the wrong side of the market, right? And they wonder why. Okay, again, if price pulls back, it's okay. Just hold onto your trade, follow your fixed mechanical management. Like I said, all demand zones are going to facilitate those pullbacks. We expect it to happen. Don't panic, right? Adjust your zone. Like this is what can be really helpful, right? Now this becomes our new strong internal high, right? Because that's the high that broke the low. Just follow structure. You have strong structure now protecting your trade, okay? So price hopefully shouldn't break that strong high, right? We expect it to not break that high. We expect it to come in and mitigate this demand and continue lower. So don't panic if you're in a trade and you see price pulling back. Almost a good tip is to delete this if you're in a trade and just map it as if you went in the trade and you understand. You'll see, oh yeah, there's supply here. And then you don't get scared and then you don't make dumb decisions and, jump out of your trade early, all right? So we've got some supply here. Potentially you may want to look for an entry at this point. It's not, looking amazing, but that's definitely a level in which you could look to trade from, right? There could be another entry there. Hey, it just depends on the risk reward and how much you want to like it. Like if you're entering the zone 3.5 RR, that could be good. For some of you who enter it in the EQ, again, we'll talk about this later, that's when you can double your risk reward, but let's just be consistent. You're in another trade. And where are you targeting? The weak swing low, of course, but I just want to draw on the structure. Right, this is our weak internal low. And then boom. Let's see, bit slow. Now, I know it's a bit messy whilst we've got all these trades run on, so I'll tidy it up in a minute. But this is where I think people can, especially if you're on trading even lower than M15 or you see something like this, people start getting chopped up and taking unnecessary trades because this is when it's just not very clear, right? This is the internal structure, nice pull back into supply. Break to the downside, pull back to supply. Now we haven't broken anything, and where are we? We're just trading in the middle, right? This is not where, you don't want to be looking at trading from here, in my opinion, because this supply has not broken anything. It hasn't achieved anything. It hasn't broken this low. It's probably more likely to hold than demand, right? Because it's trading in line with everything, but this is not where I'd be looking for entries on a lower time frame, okay? This is just where nothing's going on. It's range bound. If you haven't taken it here and you haven't taken it here, then you've missed the high probability moves. This is where I'd just chill out, wait for new structure to form, okay? Now it comes back into that level, so maybe, that's what I'm saying, it can play out, but I just think that's when you want to be taking easy trades, when it's clear, right? These clear movements in price, not when it's trading in between a weak high and a weak low, okay? And then eventually we wick that low, so be out of the trade. So there was a risk entry for around 6R, okay, and then 2 confirmation entries there for about 3.5R, right? But the whole thing, hopefully you can now see, I'll do a super quick recap of that once I just change that to that, was we had the swing breaker structure, okay? Then we looked to play that swing pullback up to premium levels of supply. There are multiple levels of supply we could have looked to trade from, but we waited for structure to shift in our favor. We got that clear shift in our favor, enter from the strong internal high, another movement down. All levels of supply just become, reaction points for the pullbacks. This is a strong level of supply, right? These are the pro-trend moves. This is when everything's aligned. This is where we want to get involved. Then you've got to be patient for a few days and eventually you get there, okay? And that's it. Problem it gets with people is it's just doing the dumb things in between, trying to take longs here from these tricky ones which often don't get respected and then getting chopped around in here and just being impatient. But yeah, hopefully that's kind of clear. Okay, cool. Let's fast forward this a little bit. So if you remember the bigger picture, without me even going up in the time frame, and hopefully you can visualize it, remember what we had in the 4-hour time frame? We had that 4-hour swing pullback, 4-hour swing lower low, and then we had that 4-hour swing breaker structure. So some of you may have forgotten the whole time we were messing around in here, right, and talking about this other stuff in the M15. But what we're doing, we're playing the 4-hour pullback, potentially down into demand, to then capture the next 4-hour move to the upside, right? So we were playing that initial move to the downside. We've now had, not quite yet, let's see if we get it. Now we've had the M15 boss, okay? So we can look to keep following the M15 bearish swing structure, right? This now becomes our strong high, right? We now have a new high. And we can keep following this, but we have to understand that the further we pull back into this 4-hour level, by drawing the premium discount from the swing 4-hour swing low to the 4-hour swing high, the nearer we get into the EQ, the higher the probability that this 4-hour swing pullback is over and demand's going to step in, right? And we're going to push up higher. So we do have this 4-hour level of demand, which remember was in that daily level of demand. But let's see now, we can see any M15 zones from within here to potentially help us refine that. So we've got this level here, right? And then we've got this level here as well. It's kind of already been mitigated, so that's not the best. You see we've already had that tap into it. So what I would do is I would draw it like that if this was a live market. But if we pushed a little bit lower, right, if we came here and we melted through this and we were like hovering around here and then I saw a shift in structure, I would look left and go, oh yeah, no, we did, okay, we already did have a a tap there, but look, it was only on the edge. There's still probably like going to be a ton of orders in here. Doesn't make sense. Yes, okay, then I'll drag it across and then I'm happy to look to get involved. Okay, so use a little bit of common sense sort of in that scenario. And then of course we've got a nice big obvious zone down here as well. And there's some zones within here, but we can cross that bridge if we get there. Okay, so we know this is in the EQ, right? We've had that pullback from 4-hour supply. We looked at how we could trade that on the M15. Now we want to focus more on capturing that 4-hour higher low, right? So let's play this forward and let's see what happens. So we come into demand and then we get a pretty strong, really strong shift, okay? So we've literally, see this is dotted line, that's the 4-hour EQ. So we pull back to the 4-hour discount. Ideally, we would mitigate 4-hour demand. That would give me a lot more confidence to want to get involved. But I know that we don't have to, especially when it's that first initial trend change. Momentum can be quite strong. And also look at this. Like that to me screams big money stepping in, overwhelming imbalance between supply and demand. We have had a bullish M15 shock, right? And there you go. Now you've got M15 levels of demand, right, to work with. We do have this sell before the buy, but it's kind of part of the up move. You have that nice extreme there. This caused the supply to fail as well, right? So you can really see price shifting. Now, would have been ideal, I don't think. Yeah, it would have been ideal if price closed above this high, because then you'd have like a real nice, bullish IBOS from the previous internal structure over here. But we're not always going to get picture perfect. But you can clearly see like price smashed up to that supply. And this is a pretty good level in which you can look to capture that potential swing high low. But we have to be very wary. We are still trading against the M15 swing trend. But this is the time in which you can have a lot more confidence doing it. Like this is a lot more high probable long, counter M15 trend long in my opinion, than the one we took over here. Why? Well, because now we pull back to the 4-hour discount. This is when we're trying to capture that 4-hour pro trend move, okay, in an area of 4-hour value because we're in the 4-hour discount. So this has a lot more going for it than just, a chock over here, right? And there we go. Just misses that one actually on this data feed. So yeah, another would have been another tricky one. That would have been a tricky little period actually. If you took the risk entry there and just got missed, and here, depending on, that would have been a bit tight. Some of you might have got tagged in, some might not. Potentially in a lower time frame, you'd probably get an M1 entry from within here or M5. And there we go. But the idea stands, right? You guys can see the framework in which we're using to know when to trade pro trend and counter trend. Now this whole time, again, look, there's the unmitigated levels of supply. Like we've got these levels here. Potentially price could react from. Yes, a bit of a move. And I'll be wary of all these levels. But probably if price breaks through this, there's nothing really left. Because look, all of the supply has already been mitigated and absorbed. Yes, there could be something from this within this wick, but like if this goes, let's see how it reacts. Yeah, we push up through. Now there's not really much left. Like there'll be some stuff within this wick, but it's pretty much all systems go now to clear of this high if it's going to shift bullish, right? There's no real clear supply left in the way, chop around for a bit, and then eventually we go. So yeah, I won't do any more price action than that because this video has already been longer than I had intended it to. But let's kind of talk about this over the higher time frame. So what did we do? We had the daily bearish boss. We were expecting the daily swing pullback. We got a daily bullish change of character over here. Let's look on the daily chart actually. Okay. Because remember, it stems from the higher time frames, right? And when you get that first, it can really help you. So swing breaker structure, waited for the fractal structure to shift bullish. That gave us a level of demand. Now we actually just missed that level of demand on the daily and the 4-hour chart, which we'll see in a minute. But remember, that's the pivot, right? That's the sell to buy range, which we did mitigate. Bullish daily change of character. Let's see if we can target a pullback up to at least premium supply. 4-hour chart. That daily fractal structure happens to be the 4-hour swing structure. We shifted bullish on a 4-hour swing structure. There were a couple levels of old supply, right? We had this level, we had this level first, but price ended up having a little bit of an intraday reaction and ended up smashing through. And then we came up into this more extreme level, right? Which makes sense, led to that movement. 4-hour bearish change of character, which then gave us this 4-hour supply zone. That's when we then jumped down to the M15 to look to play the pullback into there and then play that movement. We didn't quite tap into the daily zone or the 4-hour zone, which would have been a lot nice, right? That would give us a lot more confluence and a lot more confidence to try and capture this move. But this is a good example of where we're not always going to get what we want, right? And when you're trading pro the 4-hour trend, you can get a little bit more aggressive when the time is right. So we dipped into the discount prices and then we got that move that we just looked at, okay? So let's just dump down into the M15 to quickly recap how we traded that move with multiple potential entries. So that 4-hour mitigation of supply, right? If we look left, you probably even find an M15 zone within here, right? That we come off. But anyway, we switch bearish. So now we can play the M15 swing pullback phase. It depends on how much confidence you want for. This will come with time and experience. I'm not going to tell you that as soon as you get an M15 bullish chalk from an M15 level of demand that you should play the counter trend pullback, okay? Because unfortunately, trading really isn't as simple as that. Sometimes price is going to move down super impulsive. It depends on how the 4-hour looks. Are you trading with or against the 4-hour chart? There's obviously a lot of variables that are going to be involved, and it's something you will gain with more experience. This was quite corrective. It didn't break with a lot of momentum, and we got that 4-hour chalk, so you could look for that entry. If you want a bit more confluence, right, then you can wait for the 4-hour bullish IBOS. We've had demand being respected. Then this looks pretty clean. Problem with that though is then you are trading against, we've mitigated 4-hour supply there, so it gets a bit tricky. So this is where I said, okay, just keep it simple, be patient, wait for the pro trend moves. We had sort of 3 key levels of supply we were looking at. Now you might want to set, risk entries on all of those, so you just put your sell limit on all of them. But remember, I said if you're going to do that, at least do it on the extreme or maybe the next one down. Otherwise, wait for your confirmation entries, and it saves you from a lot of losses, right? We come up into supply, push straight through it. We come up into this one, bit of a reaction, but we don't get any shift in structure, right? Wait for a bit more. We continue bullish, we come up into the extreme, and then what do we get? Then we get the shift in structure. Demand fails, supply takes control, enter short, right? Internal pullback, come up into there, there's a supply at the strong internal high, enter short, and then you just got to be patient. There's nothing high probability there really, and then eventually we get the movement, okay? Now, capturing the 4-hour swing high or low, is this an easy trade to catch? No, it really isn't. The easiest way to be would be if it was super clean. Like I said, if we came into the 4-hour demand, the 4-hour swing trend shifted bullish, we were then trading pro M15 swing trend, right? That's the way we talk about it in the theory classes to understand the frameworks. And when this happens, I love it, right? This is a super high probability trade. Sometimes we have to trade the market a little bit more, messier, and sometimes we don't have everything aligned, right? But there's still a ton of confluence behind this because it's pro 4-hour trend, the start of the 4-hour move, in the 4-hour discount. This is a strong level of supply. Again, we haven't quite got to this yet, but some of you will recognize that was also an M15 flip. Okay, it led to the swing break of structure. There's other liquidity stuff as well, which we haven't learned just yet. And then boom, right, this is another big signal, like big money stepping in. There's a lot of confluence there, and it makes sense. But yeah, hopefully you kind of starting to see now how we're overlapping supply and demand with structure zones. And yeah, hopefully, you guys are not too confused. I appreciate some of these videos are a bit long, but yeah, we'll go through this. We'll do tons of examples, tons of trade examples on different price action, and you'll get more comfortable with it. Alrighty, so now we're going to start to dive into supply and demand flip zones. So let me just quickly cast your mind back to, again, I always try and think, let's try our best to keep things simple, okay? Because it's very easy with what we're doing here, with the amount of confidence that we can look for and multi-time frame analysis, 2 types of structure and all this stuff, it can get quite overwhelming. So always, if you try and cast your mind back to what is the logic behind what we're trying to do here, okay? When just thinking about supply and demand on its own, we're trying to look for where did, a way I simplify it is where did big money step into the market, okay? It's not quite true, but that's essentially what we're trying to think about. Where did that overwhelming imbalance between supply and demand happen, right? If demand has stepped in, if demand's taking control, I'm trying to spot where that occurred so that when price returns to that area, there's a good probability, more often than not, that price is then going to continue that move from that area, right? Range, initiation, mitigation, continuation. Okay, cool. That's what we're trying to do. Now, when we drew those everywhere, the supply and demand zones everywhere. Okay, so the main filter we use to try and look for institutional zones is we want to see that zone break at least some form of structure, right? At least break, like a fractal high or low, but at a minimum. Okay, so that's the first thing we've been looking at is structure zones. So I've just drawn here a typical bit of price action where price comes up and then we break this low. We look back for, there's the extreme zone, there's the supply zone, that broke structure, right? Demand fails, price just pushes straight through, and we can enter on that extreme zone that caused the break of structure. Exact same thing for demand, right? Price breaks structure, we look back, there's your extreme zone at the apex of the move, right? That led to the break of structure. Now, flip zones are basically, simplest way to describe it is where we see supply and demand have a bit of a battle and then one overpowers the other. Okay, so simplest way to describe it is actually go back to the first example. So let's think about demand. Price makes a higher high, it pulls back to form a higher low, and that's confirmed when we get the break of bullish structure here. Okay, when that bullish break of structure occurs, we can then look back in this leg and we can see that there was some demand, right, that caused that break. Okay, happy days. So when price is pulling back, the simple expectation would be that this demand should hold, this should be a strong low, and demand will do its job, and demand should cause a higher high. But in this example, that doesn't happen. In this example, price literally just trades straight through it. It pretty much smashes through it. There's no reaction. It just melts through it as if it wasn't even there. So structure now shifts bearish. Demand has failed. There was no reaction, goes straight through. And now we have supply in control and we can look to potentially short from that strong supply zone that led to a break of structure. Okay, cool. So the key sort of thing here is that there's no reaction, that we just melt straight through demand, right? This is a very, very similar scenario, except there is a reaction. And that's pretty much the only difference, okay? Everything stems from this reaction and it will make sense in a minute. So price makes a higher high, it pulls back, and then it makes a higher high again, right? So we get that bullish break of structure, which creates this level of demand that led to the break of structure. Okay, you're with me so far, hopefully. So exact same as here. Price then pulls back into this demand level. And just like I said over here, at that moment, right, we can't see the rest in the market. At this moment, if this is all we can see, it would be safe to assume that it's likely this demand is going to hold. And if demand does its job, what should demand do? It should cause a higher high. It should lead to another break of structure, okay? So if price comes into this demand level and it reacts, for it to have done its job, it needs to break this high, okay? Now, ideally, you want to see it cause price to break and close above that high, ideally, okay? But if you get a wick break, you could argue it's kind of half done its job. And that will kind of become important in a minute, okay? In this instance, price comes into the demand and it does react. So the reaction is key because basically the reaction tells us that this is somewhat significant demand, that there were actually, enough orders from within here to actually contain price and to make price react a little bit. Like here, this is valid demand and it did cause a break of a high, but when price revisits it, there's no reaction, it just smashes straight through. But here, we need to see a reaction for a flip, okay? I just tried to make this clear because sometimes a lot of people can miss this part and it's really, really key. So price comes in, it reacts, okay? But it never breaks the high. So demand doesn't do its job, okay? Now, we only have confirmation that it hasn't done its job once price breaks and closes below where the reaction started from, okay? So I'll say that again. When you get the reaction and price starts to move up, if price doesn't break this high, so it doesn't do its job, when price then pulls back down and when it closes, so I need to see a candle body close below the start of the reaction, that is what we call a failed reaction, okay? Again, I'm going to keep going over this many times. Price comes into demand, it reacts, it tries to do its job, but it fails to take out the high. Okay, but we only get the confirmation of that failure once price moves down and it closes below that dashed line. It closes below the start of the reaction. So at this moment here, if you now get a candle body closure here, what do we have? We have a failed reaction. And this is where we can say that demand, so this demand zone, has now flipped to supply. Okay, because this box I've drawn on, so from the low of the reaction to the top of the reaction, those two orange lines where we have the gray box, that is your supply zone that overpowered demand. So that's buy before the sell. That's where the supply stepped into the market between those two orange lines to overpower our demand zone here. Okay. So again, we have demand, right? It's valid demand because it broke that high. Price comes down into it, it reacts, it fails to do its job because demand should make a higher high, but we only know and we only have confirmation that it failed to do its job once price closes below this low, right? Assuming that it didn't break the high. If price then comes back down and closes below the start of the reaction, we now have a confirmed failed reaction. I personally want to see a candle body closure, okay? And I would recommend you also wait for a candle body closure. Some people use wicks, that's more aggressive, and you can use it however you want. But I'm just telling you what I do. As of the time of recording, I need a candle body closure for a failed reaction. And I would just recommend that you start with the same and you can test wick breaks if you want, okay? So at this moment here, if price is where I've circled it, we have the failed reaction. So we have the flip, but what we don't have is we don't have that let's say that change of character. We haven't had structure shift. Ideally, we want to see structure shift as well because, and this is the bit that some people get a little bit confused with, but at this moment here, if price is where the circle is, we do have a confirmed failed reaction. Demand has flipped to supply, but there are still some orders left within this demand zone, right, below the reaction. And sometimes what can happen is you can get the failed reaction and you can get the flip, right? But there are still some orders from within this demand zone. Price could tap into here, right? Structure is still bullish because structure is between this low and this high. And sometimes it could fill up more orders and it could push up higher. Okay. So if we're looking to short and we want to short on the flip, ideally what we wait for, or what I wait for, is I also want to see structure shift. Okay. So we get the demand to supply flip. That is confirmed once we have the failed reaction. Okay. But this demand zone itself only fails once price actually trades through it. Okay. Because there still could be some orders. So a zone fails only once price trades through it, right? Which is what happens if price is down here. That's when the zone has failed, but the reaction fails when it closes below the start of the reaction. Okay, so hopefully that makes sense. So once we get that closure below and we also get the shift in structure, now we have a zone that flipped demand to supply and it led to a break of structure. So now this becomes a high probability area to look to get short on. Because obviously you could also have the extreme zone up here. So this is where you can have two POIs, two supply zones. You get one that flipped the zone and broke structure, and you got one at the extreme that just led to the break of structure. Excuse me. But if there's a flip, that can also help us to look to enter on the flip, okay? So here, again, this is what we've been looking at so far, just zones that lead to a break of structure, right? There's no reaction there, so we look for price to come up. This is exactly the same, except there's a reaction in this area, right? So higher high, higher low, higher high. Price comes into demand. If demand's going to do its job, then it should make a higher high. But if it fails to break this high, right? And then as soon as price closes below the start of the reaction, so the FR line, the failed reaction line, as soon as we get a candle body closure, we can then draw on our supply zone from the start. So if you're drawing it on, you would go from the start of the reaction to the top of the reaction. Okay, that's your supply zone. And then ideally what we also want to see is we want to see the price trade through the demand zone, so the demand zone truly fails. Not just the reaction, but the zone itself. Once price trades through it, then the zone has failed. And obviously we get the structure shift as well. Now this becomes the high probable level to look to short from, okay? Because it's flipped demand to supply and it led to a break of structure, right? The other thing I'll say about these zones when you're drawing them on candlesticks, which we'll talk about in a minute and in the next lesson, is sometimes you can have very big price action. Like this could be a big move, like multiple pips. Price comes in, you get another big reaction, and then price moves down. And then if you draw on your zone, right, because remember the supply range is from the low of the reaction to the top of the reaction, sometimes this can be a very big zone. So it doesn't give us very good risk reward. So what we can do is we can refine it to like the pivot zone from within it, like the single candle, and you can refine it. But we'll talk about that in the real price action. Don't want to confuse you just yet, okay? So from a bullish example, we just think about a structure zone. Again, it's just one that leads to a break of structure. Okay, we look back in this leg. Where are the zones? There's a zone here. Okay, that's a structure zone, right? There's no reaction. It's just one straight move up. Here, it's the same thing, except there is a reaction to supply, right? Price comes into supply. If supply is going to do its job, what should happen? It should push price to make a lower low, right? That's what supply should do. But in this instance, it has a reaction. And remember, there must be a reaction for there to be a valid flip. If price just goes straight up through, then there's no flip here, right? We need to see a reaction. So there is a reaction, which means there should be some supply within there, but that reaction fails to do its job. It fails to form a lower low, and then price breaks up and closes above the top of the reaction line. Once that happens, you now have a confirmed failed reaction, right? The reaction has failed to do its job. It's failed to make a lower low. So at this moment, you have a flip. And again, that's where you can draw your flip on, right? You take your box tool and you draw it from the top of the reaction here to where it starts to the bottom of the reaction, and then you drag it out to the right. And that is where the supply stepped into the market to flip demand, to overpower demand. And like I said, we also want to see it break structure. So now we have a zone that broke structure and it flipped supply to demand. And now this becomes a higher probable area. And again, if it's a big zone, you can refine it to the pivot from within it. Okay. And that's flips. Now, you can take that theory and you can apply it onto charts, and you can kind of draw them everywhere and do these big expansive ones and make price action very, very, very complicated, which is a common sort of mistake I see. So again, we'll go into much more depth of this with price action examples in the future. But my advice would be try and just kind of stick to the ones that are simple and clean. They'll be obvious, okay? And that will come with time. But as long as you understand this theory, it makes sense. So just super quick recap, kind of the key points, the common mistakes I see is for a flip, there must be a reaction first, okay? So you need to see price react. As long as it doesn't break that high, as soon as price then comes down and closes below the low of the reaction, I personally want to see a candle body closure. We now have a failed reaction. But at this moment, if price is here, I know there's supply here, a demand to supply flip, but I'm not going to set my order on here. Why am I not going to do that? I need to wait for demand to truly, truly fail, not just the reaction, but the zone itself. And I want to see structure shift. Okay, I need to see that structure shift. Now I've got it. Okay, now I'm happy to get involved, because remember, there's a small possibility that when price is here, it could fill up some more orders and it could continue, and then you take a loss. So I personally want to see the structure shift as well. Okay, and then once you have that, boom, there's your flip. Right now, again, it's not 100% win rate like anything in trading. There can be times where the flip will fail and it will come up to here. Okay. But we'll look at some other things to try and help us guess, or not guess, but try and anticipate whether we should enter on the flip or whether we should take the extreme. Okay, cool. So I just kind of put two examples here of kind of how this looks like, but again, we'll go in depth and more in the next lesson. But essentially, let's look at supply first, right? We have this move to the downside. So you could technically draw on your whole, use a box. You could draw on that whole range, right? It should be familiar with now. You could go from the low to the high, and that would be your supply range, right? But obviously in this example, I've refined it to the pivot within it, right? The inside bar. So when price comes back up into the supply at this moment, let me just zoom in a bit. Okay, so zoomed in a bit now. So when price comes up into that supply zone, right? We would just at this moment, we wouldn't know that this is going to happen, right? And we would assume, or we could safely assume, that potentially that supply is in control and it will just continue, right? So what happens? Price comes in, it reacts. Remember, the reaction is key. But what does the reaction fail to do? It fails to do its job. It fails to make a lower low. So then as soon as price, so what you can do is mark out the top, right? If you want, if it helps you, mark out the top of the reaction. As soon as price closes above that failed reaction line, that orange line, you have a flip. It just so happens that that one candle that does confirm the flip, confirms the failed reaction, it also breaks structure in that one candle, which is happy days, right? So when that candle is up here and it closes, what can we now do? We can draw in our supply zone from the top of the reaction to the bottom of the reaction, and that is our supply to demand flip, and boom, there we go, right? Price comes back in, fills the orders, and goes. Now you could have also refined, you don't always have to take from the top of the reaction to the low of the reaction. Obviously, if there's like a pivot zone within it, so that inside bar, you could potentially refine to that as well, and then maybe you could have a bit of a tighter stop loss. But if I saw this example, I personally would still want to cover that low, just because sometimes price can come a little bit lower, fill up some orders from within there and go. But can you start to see now the theory, how it applies to candlesticks? Okay, they're always going to look slightly different, but it's the same framework. There's valid supply, price comes in, it reacts, it pushes up, comes back into it, and we go, all right? Candle body closure and the break. So now let's take a look quickly at the supply example. So this is a demand to supply flip. So again, bullish market structure. This demand leads to a break of the high. Okay, so it's valid demand. Price comes into the demand. If it's going to do its job, what should it do? It should react, and it should lead to a break of structure. It should break the high. In this instance, it fails to do so. So as it's reacting, right, if you're anticipating this flip, all right, because obviously prices probably come into the supply zone and we're trying to anticipate that this is going to happen, you can then mark out the low of the reaction and you have to say to yourself, I need to wait for a candle body closure below that reaction. And again, just like the other example, in this instance, it just so happens that that one candle also broke structure as well, right, and completely cleared out the demand. So it all happened in one go, which very often happens. And then what do? We draw from our supply zone from the low of the reaction to the top of the reaction. And that is your flip range. That's your demand to supply flip range. And you can look to enter, or you could refine to the single candle, but sometimes you're not going to quite get tagged in. You see how it just misses it? And that's what can sometimes happen if you over refine. It is what it is. Okay, cool. Let's just look at kind of one example with market structure, the familiar example you'll be aware of, and then we'll hop on the charts. Okay, so this should be the multi-time frame market structure diagram you should all be very familiar with. So I'm not going to bore you to death with going over it in loads of detail, even though I do believe it would be probably beneficial for you just to keep getting that repetitive cycle. But if you're not familiar with it and you're not comfortable with it, please go watch the previous structure zone theory videos and also the entire market structure module. And I'm going to go through this a little bit quicker because it's all the same. It's just we've got flips in it and you'll see why. Okay, so bullish daily market structure, right? This is the multi-time frame one. So daily comes into supply. It reacts from supply. So we know when we come into a daily supply zone, we can look to play the daily pullback, but we know we're just playing the pullback phase. Price then will eventually form that higher high, that breaker structure to the upside. Now, do you see how on a much bigger scale, what's happened? Price came into daily supply, it reacted, but it never broke any daily structure, never formed that daily lower low. So if price then breaks to the upside, what do you have? You now have a daily flip, okay? So you could take the whole range, right? You can draw it from the top of the reaction down to the bottom of the reaction. And now this is your whole daily range demand. It's the whole swing range, right? The whole swing pullback. That's your range demand from a structure perspective, structure zone. And it also flips this level, okay? But obviously we can refine it, to what I call the extreme of the reaction leg. So this being the reaction leg from supply, and we can refine our flip down to here, right? And you see how it's the same thing as a structure zone, but if it flips supply like that, then it just becomes a flip as well. And there you go, right? Okay, let me just get rid of these orange lines so just keep it somewhat relatively clean. Okay, cool. Then we come up into the next daily supply zone, which then initiates the next daily swing pullback phase. We get a daily, let's just say it's a daily change of character, which just so happens to be a 4-hour bearish boss, so the 4-hour changes trend. So we get a 4-hour swing lower low. This becomes our 4-hour strong high. This becomes our 4-hour weak low. As price is pulling back, we want to short and capture that 4-hour lower high to try and play that daily swing pullback, right? But when we do that, there's probably going to be multiple supply zones. I haven't drawn this on, but there'd be one at the top that ultimately led to the breaker structure. And then like before, if you saw a pullback like here, that would be another structure zone. But if we look left and go, where did that reaction initiate from? This reaction here, and we can see that it came off a demand level, then what is it? It's a demand to supply flip, right? Price comes into demand, it reacts. As soon as we get the candle closure below there, we have the failed reaction. Then we also get the structure break, okay? And now this is a flip zone. So even if you had zero knowledge of flips and you never knew what they were and you just traded structure zones, a lot of the times they're going to be flip zones without you even realizing it, okay? And it's not some magical thing, but it just sort of increases the probability of zones when you get that on average, I find, okay? So that's a flip zone again, same thing. We have a reaction from here, so there could be a zone up here, but then we get the flip zone, reaction to the flip zone, so on and so forth, right? And then we come down into the daily zone, we come up, we react from the 4-hour supply, right? So we could look for shorts from within here, but we know we have to be aggressive in management if we're doing that because we're coming off daily demand and it's likely we're going to switch bullish because the daily swing pullback is over, okay? But if that reaction then fails to break the low and then we move to the upside, right? What do we have? We have a 4-hour supply to demand flip. So you can take your zone from the top of the reaction, right? And you draw it down to the bottom, and that is your entire 4-hour flip range. But obviously, like I said, we can refine that flip down to the extreme of the reaction leg to just be a little bit more refined. And then you have your 4-hour zone. And then again, M15 comes in. What do we have? M15 supply, price comes into supply, it reacts, it fails to do its job, it fails to make a lower low. Demand steps into the market to overpower supply. We get the failed reaction, we get the shift in structure, and now you have your M15 supply to demand flip. And again, you can take it from the top of the reaction to the bottom of the reaction because that's your entire flip demand range, or we can refine it down to the pivot. And there you go, okay? So I haven't gone super in depth in all of the expectations and blah, 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 but it's literally just the same as structure zones, except you're just looking for, was there a reaction? Where did it overpower it? And then that can show you as a flip. And because sometimes, right, you'll have an extreme like this that led to the breaker structure, and sometimes you'll have the flip. And there you go. It's just another way of being aware of what's going on there and seeing that battle. So without further ado, let's hop on the charts and let's take a look at some real examples.